Welcome to the audio press release, APR, powered by IBM. This original production delivers market and sector insights, as well as executive interviews with innovative executives shaping the future in fast-moving industries, and may feature a client partner of IBM or one of the 75-plus investor-focused brands within IBM's dynamic brand portfolio. As multifaceted financial news and publishing company, IBM leverages its extensive distribution network, utilizing multiple proprietary corporate communication tools to introduce both public and private companies to a vast and diverse audience of investors, consumers, influencers, journalists, and other targeted segments of the public. IBM may have received compensation to produce this audio content. Please be sure to read IBM's entire disclaimers for full disclosures. This article has been disseminated on behalf of Nightfood Holdings Inc. and may include a paid advertisement. AINewsWire presents AI Service Robotics Market Accelerates as Platforms Move from Prototype to Revenue Deployment. Artificial intelligence-enhanced service robotics is rapidly shifting from experimental prototypes toward real-world commercial deployment. The shift is driven by labor shortages, rising operating costs, and accelerating advances in machine vision, AI models, and automation infrastructure. Industry forecasts illustrate the scale of this transition. The global service robotics market is projected to expand dramatically over the next decade, fueled by adoption across hospitality, logistics, healthcare, and retail environments. Forecasts by both Precedence Research and Grandview Research show strong double-digit growth expectations. Within this broader shift, companies transitioning from prototype demonstration to revenue-generating deployment may define the early robotics-as-a-service infrastructure layer for operational automation. Nightfood Holdings Inc, NGTF, through its subsidiary TechForce Robotics, provides a case study of this evolving commercialization phase. Recent announcements by the company include moves to secure full intellectual property ownership of its BIM-E robotics platform, align engineering leadership incentives with revenue milestones, and accelerate manufacturing initiatives after validation at CES 2026. This movement places Nightfood solidly in position with other leaders in the AI and robotics space, including NVIDIA Corp, Richtech Robotics Inc, Qualcomm Inc, and Rockwell Automation Inc. Disclosure: this does not represent material news, partnerships, or investment advice. The service robotics industry is increasingly transforming from a research and development phase into a commercialization-driven growth cycle. Nightfood Holdings' recent acquisition of the intellectual property behind its BIM-E platform demonstrates the importance of IP ownership strategy in action. Another emerging hallmark of commercialization-ready robotics companies is the shift toward performance-based leadership structures tied directly to measurable financial outcomes. Nightfood's participation in CES 2026 illustrates how companies use these platforms to validate commercial readiness. Nightfood and TechForce Robotics are positioning their BIM-E platform within the emerging Robotics-as-a-Service framework. Service robotics enters commercial deployment phase. The service robotics industry is increasingly transforming from a research and development phase into a commercialization-driven growth cycle. Market projections suggest strong expansion fueled by real-world deployment rather than purely conceptual innovation. For example, industry analysis indicates that the global service robotics market could reach more than $107 billion by 2030, supported by adoption across sectors requiring efficiency, consistency, and automation of repetitive tasks. The expansion is widely attributed to rapid advancements in artificial intelligence, machine learning, and computer vision technologies that enable robots to operate reliably in dynamic environments. Labor challenges are a significant catalyst behind this shift. Hospitality, food service, and other customer-facing industries continue to experience structural labor shortages and rising wage costs, creating strong incentives for automation. Reports from the restaurant sector highlight how robotics are already being deployed to maintain operational consistency and manage staffing challenges, reinforcing the role of AI-enabled machines as productivity tools rather than novelty experiments. In addition, analysts emphasize that demographic shifts, aging populations, and productivity pressures across service sectors further strengthen the case for automation as a long-term structural solution. Commercial readiness is becoming the defining characteristic of this new phase of robotic adoption. Companies seeking to scale beyond prototype stages increasingly focus on several key factors. First, clear ownership of intellectual property helps establish operational control, legal clarity, and partnership readiness. Second, engineering leadership structures tied to measurable revenue performance signal execution-driven strategies rather than speculative innovation. Validation through major technology showcases such as CES helps demonstrate real-world functionality under demanding conditions. Finally, companies capable of transitioning from prototype demonstration to scalable deployment are positioned to define early robotics-as-a-service infrastructure layers that allow businesses to adopt automation without large upfront capital investment. Market data further reinforces the shift toward commercialization. Professional service robots are projected to experience particularly strong growth as industries prioritize automation solutions that reduce costs and improve throughput. These trends suggest that robotics cycle is entering a stage similar to earlier technological waves, where early adopters begin establishing dominant operational models and revenue frameworks. Within this context, Nightfood Holdings and its TechForce Robotics subsidiary illustrate how companies may navigate this transition. The company has focused on deploying AI-driven automation specifically tailored to hospitality workflows, including beverage dispensing and operational efficiency tools designed for high-traffic environments. By aligning product development with real-world deployment goals rather than remaining in pilot phases, the company reflects the broader industry shift toward commercialization, readiness, and scalable infrastructure. Intellectual property ownership shapes competitive advantage. As the robotics sector matures, intellectual property ownership is emerging as a critical differentiator between companies positioned for commercialization and those remaining in experimental phases. Clear chain of title over robotics platforms, software, and engineering designs allows companies to streamline partnerships, navigate regulatory considerations, and protect technological differentiation. In industries where robotic systems combine hardware, firmware, AI models, and operational data, ownership clarity becomes essential for scaling deployment across multiple markets. The importance of IP consolidation has grown alongside the complexity of robotics systems. Modern service robots integrate multiple layers of technology, including embedded software, machine learning algorithms, sensor integration, and user interface systems, which must operate cohesively to deliver consistent performance. Companies lacking unified ownership risk facing licensing conflicts or operational limitations that hinder commercialization. As a result, many emerging robotics firms are prioritizing acquisitions or restructuring agreements that bring all key assets under a single organizational umbrella. Nightfood Holdings' recent acquisition of the intellectual property behind its BIM-E platform demonstrates its strategy in action. According to the company, TechForce Robotics secured full ownership of patents, software, firmware, AI models, and trade secrets associated with the BeerBot and BIM-E systems, creating a consolidated intellectual property structure designed to support commercialization and regulatory clarity. The consolidation removes potential ambiguity surrounding ownership rights and allows the company to pursue partnerships, manufacturing expansion, and future transactions with greater confidence. Industry analysts frequently emphasize that IP ownership can also influence valuation and investment potential. Robotics companies with defensible technological assets could attract strategic partners or acquisition interests, particularly as automation becomes a priority across hospitality and logistics sectors. Furthermore, clear IP ownership simplifies the licensing of robotics platforms under a subscription-based model, which are becoming increasingly common as companies adopt robotics-as-a-service frameworks. Another advantage of IP consolidation is the ability to iterate rapidly on engineering improvements. When core technology components are controlled internally, development teams can modify designs, integrate new AI capabilities, or adapt hardware configurations without relying on external approvals or licensing agreements. This flexibility is particularly valuable in emerging markets where rapid innovation cycles determine competitive positioning. By consolidating BIM-E intellectual property follows its strong engagement at CES 2026, Nightfood highlights how ownership strategies may signal readiness for broader commercialization. The company's approach reflects a broader industry trend in which robotics firms move beyond experimental prototypes toward structured asset ownership models that support scalable deployment, manufacturing partnerships, and recurring revenue strategies. Revenue-linked engineering leadership signals execution focus. Another emerging hallmark of commercialization-ready robotics companies is shift toward performance-based leadership structures tied directly to measurable financial outcomes. In earlier phases of robotics innovation, compensation structures often prioritize technological experimentation or milestone-based engineering achievements. However, as the industry moves toward deployment and revenue generation, leadership incentives increasingly align with operational performance and market traction. This shift reflects broader evaluation and robotics ecosystem. Investors and industry observers are paying closer attention to execution metrics such as revenue growth, deployment scalability, and customer adoption rather than purely technical breakthroughs. Performance-linked compensation frameworks can help align engineering teams with commercial objectives, encouraging product designs that prioritize reliability, manufacturability, and customer integration rather than experimental complexity. Nightfood's recent leadership changes illustrate the trend. Following the acquisition of BIM-E intellectual property, the company appointed investor Christopher Erpelding as chief mechatronics architect with a compensation structure tied to trailing 12-month revenue milestones. Equity-linked incentives unlock incrementally as revenue targets achieved, reflecting a direct connection between engineering success and commercial performance. The structure demonstrates a shift from prototype-focused incentives toward measurable execution outcomes. Such models may help bridge the historical gap between engineering innovation and business scalability. Robotics development often requires multidisciplinary collaboration across hardware engineering, AI software development, manufacturing logistics, and customer experience design. By tying leadership incentives to revenue metrics, companies aim to encourage cross-functional alignment that accelerates commercialization timelines. Revenue-aligned compensation also sends signals to investors regarding organizational priorities. Companies adopting these structures may be received as transitioning from exploratory phases toward operational maturity. The focus on measurable revenue outcomes suggests confidence in deployment readiness and customer demand, which can influence strategic partnerships and capital allocation decisions. In addition, linking engineering leadership compensation to revenue milestones may enhance accountability during scaling phases. As robotics platforms move from limited pilots into broader production runs, operational challenges such as supply chain management, manufacturing quality, and customer onboarding becomes increasingly complex. Incentive structures tied to financial performance may help ensure the leadership teams prioritize execution discipline during this critical growth stage. Nightfood's adoption of revenue-linked engineering incentives highlights how emerging robotics companies are evolving governance and leadership models to reflect commercialization realities. This trend suggests that robotics industry is increasingly adopting operational frameworks similar to mature technology sectors, where performance metrics drive strategic decision-making and long-term growth. CES validation accelerates industry confidence and investment. Global technology showcases such as the Consumer Electronics Show, or CES, have become increasingly important catalysts for robotics commercialization. Historically, CES served primarily as a venue for unveiling conceptual prototypes or futuristic innovations. Today, however, companies are using the event to demonstrate real-world functionality, gather industry feedback, and validate deployment readiness in front of potential partners and customers. CES provides a unique environment for evaluating robotics platforms under high-traffic, real-world conditions. Demonstrations conducted during the event often simulate demanding operational scenarios, allowing companies to showcase reliability, throughput, and user interaction capabilities. Successful performance at CES can generate media attention, attract strategic partnerships, and accelerate investment interest. The broader robotics industry has increasingly leveraged such events to transition narratives from innovation to deployment readiness. As automation becomes a critical solution for labor challenges, stakeholders across hospitality, logistics, and retail sectors are seeking practical demonstrations rather than theoretical capabilities. This shift reflects growing demand for solutions that can be integrated immediately into existing workflows. Nightfood's participation in CES 2026 illustrates how companies use these platforms to validate commercial readiness. During its debut at the event, the company reported that its BIM-E autonomous beverage system served more than 5,000 drinks, demonstrating performance capability in a high-demand environment. Such operational metrics provide tangible evidence of scalability, helping potential customers assess whether robotic solutions can handle real-world operational pressures. Following its CES success, the company indicated plans to expand manufacturing readiness, recruit specialized AI and robotic talents, and explore strategic acquisitions to support scaling initiatives. These actions reflect a broader industry pattern in which successful event demonstrations translate into operational expansion and investment activity. Beyond individual companies, CES validation contributes to industry-wide confidence in robotics adoption. As more platforms demonstrate reliability and efficiency in real-world scenarios, skepticism surrounding automation decreases, resulting in broader adoption across service industries. The culminative effect is a reinforcing cycle in which successful deployment attracts investment, which in turn accelerates technological improvements and commercialization. Robotics-as-a-Service redefines operational economics. One of the most significant structural shifts in robotics commercialization is the emergence of robotics-as-a-service models. Rather than requiring customers to purchase expensive hardware outright, robotics-as-a-service allows businesses to accelerate automation through subscription-based or usage-based pricing structures. This model reduces upfront capital expenditures and lowers barriers to adoption, making robotics accessible to a wider range of companies. Robotics-as-a-Service also aligns with broader trends in technology adoption, where software-as-a-service and cloud-based infrastructure have transformed how organizations deploy new tools. Robotic solutions as managed services, companies can offer ongoing maintenance, updates, and performance optimization, creating recurring revenue streams while improving customer outcomes. For service industries such as hospitality and food service, robotics-as-a-service may significantly reshape operational economics. Businesses facing unpredictable labor availability or fluctuating demand can deploy automation solutions without committing to large capital investments. Robotic systems capable of performing repetitive tasks such as beverage dispensing, food preparation assistance, or inventory management can improve consistency while allowing human workers to focus on customer-facing roles. Nightfood and TechForce Robotics are positioning the BIM-E platform within this robotics-as-a-service framework. The company is offering BIM-E through a scalable subscription-based model designed to generate recurring revenue while enabling enterprise operators to integrate automation without significant upfront costs. This approach aligns with industry trends emphasizing operational flexibility and predictability revenue streams. The robotics-as-a-service model may also accelerate adoption cycles by allowing customers to test robotic systems with minimal risks. If platforms demonstrate measurable improvements in throughput or cost efficiency, businesses can scale deployments incrementally. Over time, this approach may create an infrastructure layer similar to cloud computing, where robotics capabilities become embedded within everyday operations. As AI-enhanced automation continues to mature, robotics-as-a-service frameworks could play a central role in defining the industry's long-term business model. Companies capable of delivering reliable, scalable platforms supported by recurring revenue structures may establish durable competitive advantages, particularly as service industries increasingly prioritize efficiency and operational resilience. The audio press release, APR, is an original content production powered by IBN, a multifaceted financial news and publishing company that delivers next-generation corporate communication solutions. Utilizing proprietary corporate communication tools such as news aggregation and syndication, social communication, and brand awareness techniques, among others, IBN introduces both public and private companies to diverse audiences to enhance reach and recognition. IBN may receive compensation for services and solutions provided to its client partners. The owners, officers, and directors of IBN or financial analysts mentioned in this production do not hold any position in and do not intend to trade the securities in their own accounts. This production is not an offer or recommendation to buy or sell any securities that may be mentioned in this production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries inherent investment risk. Listeners should review the company thoroughly with a registered investment advisor or registered stockbroker. This production by IBN is not purported to be a complete study of the featured company or other companies mentioned. Information used in statements of fact have been obtained from featured companies and other sources, but not verified nor guaranteed by IBN as to completeness and accuracy. Such information is subject to change without notice. Please read IBN's entire disclaimers and disclosures at www.ibn.fm/disclaimer. Thank you again for listening to the audio press release APR powered by IBN.